We deal with an extensive amount of money during our lives. Maybe it's the $100 we got as kids or the $100,000 we made last year. The sum can be rather amazing. But the question is, how much of that money do we really maintain? How much do we have left in our wallets or savings accounts? If the response isn't sufficient, it's time to recognize that we might not be playing the money game properly. In this detailed video, we will take a look at 6 proven financial rules of money to assist you obtain a better grasp of how to succeed financially. These principles were developed based on personal experience and lessons learned from mistakes. The most crucial guideline to remember is the fact that money is a game that can be explained and mastered, just like any other. Welcome back to The Empowered Wallet. Let's take our tour into the world of finances. If you would like to have a better financial future, hang on till the end, as the last method could be very useful for your journey. Let's get started. Do not spend more than you make. When your bank balance looks good after payday, it's easy to overspend and be less careful. However, there are various variables at play that lead to people borrowing money, incurring debt, and living well over their means. Here are some of the reasons. Lack of a budget. The importance of a budget is frequently ignored, but having a strategy for how you should spread your income and earnings is critical to staying in control of the money you spend, as well as preventing cash flow problems. The problem with spending more than you make is that it might lead to negative consequences. If you find yourself sustaining your lifestyle through debt, things can quickly spiral out of hand. Following in your parents' footsteps means learning a lot from them, including how they spend their money. If your parents are carefree spenders, you are more likely to follow that habit. Differentiate your emotions from your finances. Do you find yourself spending money to boost your happiness when you feel down? You are not alone. Of course, taking pleasure in a small treat every now and then isn't such a bad thing, but spending money excessively to fill empty spaces can lead to major financial troubles, which are exacerbated by the current rough financial environment. The first step toward overcoming this issue is to become self-aware of your spending patterns whenever you're inclined to make a pointless purchase and the manner in which you feel. Maintain or work to improve your credit score. Your credit score tells lenders how likely you are to repay any money you borrow. Your credit score also influences which interest rates you can qualify for. The higher your credit score, the more likely you are to get approved for credit and at the best rates. Having a strong credit score is essential if you want to apply for a credit card, finance a new vehicle, or obtain a mortgage to buy a home. It takes time to establish your credit score and make enhancements, so start planning early to reach whatever future financial objectives you may have. Always do your research before making a purchase. If you'd like to make an expenditure of any type, remember to look around the internet to see if you can get it cheaper somewhere else. According to Think with Google research, 53% of customers shop around before making a purchase to make sure that they've made the best possible decision. But there are still ways you can improve your research to save the most money. One method is to add a coupon finder, such as Honey, to your browser extension to help you find discounts, coupons, promo codes, and deals when shopping online, and then automatically apply those savings to your cart. Your behavior determines your success in investing. Keeping things simple makes investing easy. Invest for the long term, diversify your portfolio, keep costs low, and let compounding work its magic. Isn't it an extremely straightforward process? However, this simple act of investing becomes challenging because emotions such as fear and greed frequently influence our financial decisions. Fear leads us to sell within corrections in the market. Greed drives us to increase our investments during market advances in order to achieve a higher return. As a result, these emotions create barriers to our financial objectives. If you can control your emotions, you will be well on your way to becoming an expert investor. You will remain disciplined, and the emphasis will be on attaining your objectives rather than surrendering to short-term volatility. Get out of the debt spiral and stay away. If you're struggling to get out of debt, there are some free services available, such as Step Change, that can assist you with budgeting your money, applying for an order for debt relief, and making changes that will put you on the right path to financial wellness. Here are 2 techniques that people have used to lower their debt. The snowball method. This involves making the minimum payment on each of your bills and then repaying the smallest debt first, one at a time. This strategy boosts motivation because you will complete your repayments much faster. The avalanche method. This involves making minimal payments on all of your bills while also paying off the debt with the greatest interest rate. So if you owed $10,000 on a credit card with a 29% interest rate or a $20,000 auto loan with a 5% interest rate, you would start by paying off the credit card first. These are some of the best financial rules you should follow if you wish to have a brighter financial future. In conclusion, now that you've learned the basic concepts of money management, you may apply them to your daily life. When these financial guidelines become ingrained in the way we spend, save, and invest money, they undoubtedly contribute to our financial success. It's time to conclude the video. Thank you for being till the end. Don't forget to like, share, subscribe, and tell us what you think about this video below in the comments section. Let's meet again with our next video on finances.